point, I need to call it a day. I just couldn't do
that. All right. So, yeah, I agree. That's sometimes just got to call it a day. Okay, guys. So thanks for watching here in advance. I'm going to go through just a normal like the S&P and the Nasdaq here real quick, and then I'll go through some of the different some of the other things that we cover, and hopefully that'll help inform. So right now, I'm not going to spend too much time on. I think I say that all the time, but now like I'm actually not going to spend. Hey, Jen.
Hey.
I was just getting rolling here.
Okay.
So I was saying that I often say I'm not going to spend a lot of time on this, but I end up doing it anyways. But today we're sticking to it. So I think what I wanted to cover first here was just overall like how this is looking for like the S&P, and then just do a little bit of Nasdaq here, and then to kind of go through like the different different other tickers, kind of like normal. So this is the chart that we had up last week. So last week, I think I had marked here like what the like the A equals C extension was here. We were talking about where this larger move. Sorry, that was that. So this is kind of, sorry, one second. Let me make sure I got this. So this is what we were talking about last week, where this thing actually did play out pretty well. Up here, we saw that like B wave concentration here, but I think what we're seeing now is something a little different. You can make the case here that the last peak that we had before we had a little bit more violent of a sell-off. If you want my honest opinion about it. So for example, just to kind of make this tight here. So I think we had talked about like anything going above this level was bullish, and then anything really below was bearish. And so, I guess that definitely came true. So we're looking at, we had a good, 3.7% here move down from that. So hopefully you guys were able to capitalize on that. That was actually a pretty difficult couple days to chart. So I'm glad it actually worked out. So it's today, I'd say probably like, since yesterday, we have had this pretty decent rally from the bottom. But I think part of this is just like reflexive. Like we had that big sell-off. What was that? Sunday night, Monday? Yeah. What day is it today? Wednesday, Monday night. Sorry. But like all this war stuff that's coming through. It's been a little, it's been weighing a little heavily here, but it actually kind of is behaving. It's behaving, kind of as expected. It sounds kind of crass, but like war is not really a bearish thing for markets. Like if you had bought the dip in the start of the Gulf War in '91, like look at the chart since then. But still, like I guess you could say that there are different like angles to kind of how we could look at this stuff. And I think the first step we need to do here is kind of take a step back and look at this overall pattern. We've been talking about this for a couple of weeks now, where we've had to keep adjusting the trend line down because we keep having these breaches of these lower lows, or like these breaches of the trend line here. So, I mean, that's not bullish. Breach of these trend lines is, I mean, if it was breaking to the upside, I'd say that's bullish. But one day, where Nasdaq's up, 2% or whatever like that, to me, that still doesn't really make a trend. So let's kind of like get rid of this trend line here and start to try to figure out like what's going on with this cluster of crap here. Overall, when you want to look at this stuff, you typically want to do like peak to trough. And this is, so once like a level is broken, I always want to check it. And I always want to make sure that like, zooming out, it actually kind of jives well. So let's just take, okay. So like the last, from the last peak to trough here, I guess roughly, you can see here that, sorry, this is a bit of a mess. Let's just get rid of that for a second. Okay. So you can kind of see that you've got a little bit of weakness here starting to break down. I mean, this volume here down here is not exactly representative of what's been happening. I think it's just a European thing with an update to the ticker. Sorry, one second. Let me see if I can find. Yeah, this is probably a better representation. If you look at something like ES, so that's just the futures ticker for the S&P. You can see here that the that the volume is still. I mean, it's been high, but it hasn't been like super crazy. If you kind of dig in here, yeah, we did have actually a very large volume day yesterday. Sorry, that was Tuesday. Yeah, that was yesterday. Wow. Okay. Yeah. Anyway, so like we do have some pretty high or heavy sell days that you can see here. So that's not necessarily representative, but so anyways, I guess what I wanted to say about this whole thing was as this pattern kind of matures a little bit more, you can see it just getting weaker. There's like this rounded top sort of thing here. That is definitely a bearish sort of thing. But what I'm kind of thinking that we might see, just because this market will never die, is you could see some sort of like cup and handle pattern where you might get, let's say we get another push down here, shake everybody out, and then you get this slow kind of grind up rally. That's what you could see with this sort of like cup and handle pattern. It's just inverted, I guess inverted cup and handle. So that's just something I wanted to show as a possibility. But to kind of keep it a little bit more focused here, now it kind of seems like we're following some other trend lines, or at least like we're starting to see some sort of broadening where where it used to be a little tighter before. So this ultimate low here, I think we would see for this cycle is probably like 6,700. And we almost got there with the S&P. And you can kind of see here that, we had, all these like ABC sort of moves. This is what's called like a complex correction. And I mean, for obvious reasons, it looks complex. But when you're doing like wave counts and charting and stuff like that, what becomes really important is the use of like trend lines, because that's what algorithms will use to do pivot points. But sometimes the pattern just doesn't really look finished, and in my opinion, it doesn't really look finished here. It kind of looks like you get this these lower probes here from the bears, and then you get these knee-jerk reaction sort of reflexive recoveries, because also too there was a gap from Sunday nights or whenever that happened, there was a gap, and then typically gaps fill. So for like QQQ, if I pull this up, let's see, yeah, so like regular trading hours, you can see there's just gaps, gaps all over the place, but gaps typically fill. And I guess when it comes to this chart, it's like, so where is it going to go? So now that we kind of have our lower, like our lowest extreme here mapped out, at least in theory. Now let's take a bit more of a short-term approach here. So if this was a B-wave top back on the 25th of February, we did see this like pretty violent ABC down, but the C leg here didn't exactly finish. Typically, once you see like violent retracements like that, or not retracements, violent sells like that, you typically see at least like an A equals C sort of thing. So I'll measure that out. Yeah, so for here, you can see how it just kind of like, broke this last fib level here, but didn't quite get down to this 66.88 level, which is what I would have expected. So now it's like, okay, well, if that didn't happen, then kind of what's the next piece of the plan here? So you can kind of see all these little ABC patterns throughout this here. It depends on how you want to slice them up for your different counts and things. But as far as I'm concerned, I just don't think it's done yet. So it kind of feels like to me that there's some sort of like, another like C leg coming here, and this one would be a little bit more violent. I mean, if you think about it, it's like everybody. I hear a lot of people on Twitter or whatever X complaining about like, oh man, all the selling. Well, it's Nasdaq's only, or well, Nasdaq's down a little bit more, like 5.5% or something like that. But S&P's down like 4%. Like, calm down, everybody. That's not a real sell-off. So one of the things I'm trying to think through is, so if you kind of try to model these out and do a little bit of forecasting yourself, let's say that the top holds here, the one that was put in today, and then you could make the case here that this trend line, this A equals C kind of thing, from a timing perspective, that's really like the end of next week. So you could see, and again, this is assuming nothing else really changes here, but we did just see 0.1% here kind of melt away in futures after the first 10 minutes of that kind of sprint. So assuming that this top holds, I think that this would actually complete this sort of pattern. And I'll bet you that this also doubles as the 0.786 when I measure from peak to trough, or really close. So there you go. So this little like wiggle room zone here, and I wouldn't be surprised if we saw something like this too, where you saw a little bit more, like you saw like a breach of a trend line kind of thing to kind of shake out the week longs, and you saw like a deeper C leg, but we didn't. Let's say we don't make a new low that we had like back in right around like Thanksgiving in November. I think that would still leave the entire like structure intact for like another bigger wave up. And what I mean by that, and this is also sort of the bullish projection here, I guess you could say. So if we do have this big old rip down here, and we have some sort of support here, that's where I would like, this would be an excellent spot to buy, at least with a good stop. You probably want to take a bite, or like small bites here, like let's say like 66.15 or something like that. If you get there, I don't know if I would I would buy much here, like the 6,700 level. Like that's it's a big level of support from a fib sort of retracement level here. So the I guess the main takeaway is if we do see some sort of selling here, and it does end up being pretty violent, you're probably going to see another one of these things where, let's say, it hits the bottom of this trend line, it heads back up, and then one more final capitulation move down. And if I'm going to try to make this a little bit more clear, because we haven't really had that sort of capitulation move. Like the bulls are still buying everything that gets sold, and that's just keeping markets elevated. But in my opinion here, this actually kind of looks like it's like, I don't want to kind of bore you guys all to death with like wave 3 and stuff, but this actually does look like a larger wave 4, but it's almost like a truncated sort of thing. It's one of the more rare sort of patterns, but we actually saw that here, where this sort of sorry, one second, let me make sure that's right. I think I had this hold on. Yeah, that's about right. Okay, so we kind of had this pattern here where typically if you see this like ABC up, then you'd see like a 5 wave down, but it's not typically it just kind of it looks weird. It's like, instead of going down like this, it kind of just truncates a little bit higher up, and that's usually due to like stronger bull trends, but kind of just truncates like that and just makes a triangle, which then it just continues upward. So that to me is I think what's playing out at a bigger time frame here. So I guess long story short here, and I am trying to keep it brief, but I also want to make sure you guys are kind of understanding what might happen here. There's a lot of if then, and kind of seems like, I'd say once every couple of weeks, the markets, or at least indexes, get to like big pivot points. And right now, I mean, in my opinion, it kind of feels like this is like a B wave top. Like market, Nasdaq's up 2% today. who knows why, bombs are falling everywhere, people are getting involved, might be on the cusp of World War III, who knows? But markets still rally, right? And that's just climbing the mulberry. It's typical that does happen. War is not typically, I mean, the news headline is a shock, but but it's usually bought up right away because there's a lot of open positions and things that people need to cover, and that kind of stuff. So the behavior that we see with this like automatic retrace, that tells me that there were a lot of bulls that were trapped. But what else has changed over the last, I'd say, week? This used to be an all blue volume profile, so that tells me that sellers are now piling in. They are starting to change the narrative here, and this no longer looks like a reaccumulation kind of zone, which is what was, I don't know, not scary, okay, but like, once you started to see those trend lines break down, you started to see more sellers piling in, and I think a lot of people can tell that markets have been extended and kind of staying up here for a little bit too long. And once things get a little bit more predictable and boring, that's when you start to see some volatility. So I guess that's the I'd say probably a higher probability bearish case is we really just have like a rejection between either here or maybe it's a little bit higher up. But I don't really see it going much higher, except for there's I'll do the bullish thing here in a second, but just to kind of complete and round off this bearish case here is that I think you'll just see a continuation of another couple like ABCs, because this is a complex sort of correction. So if we do get this sort of extension and maybe we get like a lower low, so let's say it's not as extreme as what I just was showing here. Let's say this is actually probably more realistic, I think. So like the 66.15, like if the 6700 level is breached, then I think that this 0.786 level is going to be your second level, and I think that this would be a very viable bounce. Very viable bounce point. God, I can't talk today. But I still think that there are more significant levels of support below, but this 200 daily moving average here keeps kind of creeping up. That's this turquoise line, and by the time it gets to this, but by the timing, I guess you could say, like mid or end of next week, that 200 daily moving average is going to creep up a little bit higher. So odds are this 786 level is probably going to be your holy grail support level. So anyways, like this, to kind of zoom out and to kind of call back to what I was saying before with this being like a wave 4, kind of like a truncated wave 4. What I mean by that is now you can see, so you kind of see like this. There, I'll draw the I'll draw the wave patterns here. So it's like you get your first downdraft, you get your B wave here, and then you get a truncated C wave, and then you get a higher, and then you get a higher sort of, either this can be like a 5-wave sort of structure back up, which is what I'm thinking we're going to see here. So this would be the the most bullish case. Let's say 3 or 4 weeks, Iran war is over, everybody's happy again, everybody forgets. Sure, you could see this, and it could also make this could still, if the pattern holds itself, it could still be like an ending diagonal, or however, it doesn't really matter. I guess there's several different patterns that this would confirm, as long as there's not a lower low from this like 6,500 level, that I think we'll have to reevaluate here. But because megaphone patterns, like they're always bearish. Well, not always, but the vast majority of the time they are. But typically that requires like a big shock or like a big change in the news for something to flip like that. So that is I think it's like short-term bearish, but once certain levels are hit, there should be a lot of support. And like there's been a ton of buyers up here, but I think that it's like everybody's panic buying a dip because they don't want to miss the next dip. And I think what's kind of dangerous about that is we've really been trading in this really small range we've been trading in like a 3.5% range, and it's just chopping up a lot of people. So I mean, my fund money account as well, but it's like, if you can still stay on top of at least the general theme, which is, hey, it's up one day, it'll probably be down the next, that kind of thing. And we're kind of following the same script that we've followed the last, let's say, 2 weeks now, where it's you can see these big rallies, these big spikes, where buyers, they're either buying to cover and escape, trap longs, higher up, or they're slowly realizing here that, oh crap, like we're actually heading down a little bit more than we thought. So now we need to reevaluate some other positions. So there's just a lot of stuff going on behind the scenes here, like a lot of tech stocks and stuff that are getting beat up. Let's say like Intuit, down multi tens of percents, stuff like that. Like you gotta take it with a grain of salt. Like a lot of this AI disruption stuff, I think, is kind of taking over. So like there's a lot more fear out there, I think, than you're probably seeing with general sentiment. But yeah, I guess that's kind of like my short-term bearish but longer-term bullish, as long as those patterns hold. Now let's do the bullish path here. 1 second. So the bullish path is really just a continuation until it gets swatted back down. I mean, again, the volume is not really representative of what you're actually seeing. But if I look at market breadth, it's actually taken a pretty decent dive as of today, but you wouldn't think it. So that's to me, it's kind of like people are unloading. But I've been super wrong in the past, so I don't want to commit to anything. So for the bullish path, I think it's definitely reasonable. You could see an ascent, a continuation of the ascent here until about like this. It's at like 6,900. You're just going to start to see resistance at that level. Just in general, like we had only really one breakthrough, and then it immediately got sold down. Like in another leg here. So I think that you've got a couple of these little tests of that level, that like that 69.15, and then anytime you get anything above it, it seems to just get immediately sold down. So we've got 1, 2, 3, 4 breaches of that level that have all been essentially had their asses handed to them if they bought above the level. Okay, well, more than a couple, a whole bunch. So that seems to be the level, or at least close to the level. You could also make the argument that any breach of this like 69.40 level is met with the same sort of rejection, enthusiasm from the sellers. But in my opinion here, like when you kind of zoom out, you start to see the volume profile make a bit more of a difference. So I think that let's just kind of zoom into this last couple days here. Yeah, so like let's say you from a bullish perspective, let's say we have like one of these things. You could definitely make the case that that this is like an A leg. So let me change the color on that. There you go. So we could definitely see this. Where I'd say it drops back down to like 68.40, something like that, maybe even a little bit deeper. And then you could probably see some more buying there. So I think probably like overall, I mean, even with the bearish scenario, I still kind of think there's going to be just at least some sort of pullback, but it depends on how deep. So if we get a 50% pullback, which is what happened literally last night, then we, then they just buy it, for the rest of the day here. We did see some sort of rejection. I'm sorry, not rejection, but we did see a little bit of selling. We saw, like if you look at the 1 minute chart today, we saw stuff like this where like there's some profit taking, like these pretty big sells to just kind of prevent the bulls from squeezing up even higher. Because I guess in my opinion, like when you see this type of behavior, where this consolidates for hours at these levels. Like you're just getting a lot of distribution, or you're getting a lot of sellers that are taking short positions. Let's say they're buying puts for next week, next week Friday kind of thing. It depends on how long they stay up at these levels, but typically it doesn't really last longer than a day. But if it does, and you don't reverse, then you could see something like we had a couple of, was it a couple weeks ago, where we had this for like maybe 3 days before we had this, pretty nice sell after that. So anyways, that's the I guess that's the summary there, where I think any scenario you get bearish or bullish, you should still see some sort of like pullback here as like, the sellers capitalize on their new positions, and buyers want lower levels to buy it. So it wouldn't surprise me at all if there was a lot of people that were, taking profits up here, and then, that's it, then flipping short. So it's same actors, moving these markets. Anyway, so does that make sense? Is that clear at all? It's kind of like trying to do both the scenarios here. Like there's always an extension zone, no matter whether it's downward or upward. And these patterns are pretty difficult to forecast out. But I guess in my opinion here, it's a little bit easier to read once you get a little bit like later in this pattern. But I think that you could see one of these sort of moves here to kind of finish out the pattern. But I'm a buyer down here for some longs. And just to briefly touch on the Nasdaq here, Nasdaq's got a little bit different of a pattern. I find it very suspicious that we did not test, that we did not like retest this trend line down here. I think probably what you'll see is I don't want to go nuts with this, but you could see something like this. I think it's it's possible if we see the scenario where the S&P goes down here to like the 66.15, then sure, Nasdaq will probably see a decent sell. But this area here, this little chop zone here, I do think is kind of like it does closely resemble like a B wave. Now, I guess for the bullish scenario here, like if we do see one of these little pullbacks, sorry, we'll change the color here. Like if you see something like this, then like let's say this like 25, 350. In my mind, it's a sell, or at least like a short, like a small unit short. But if we hit, or if we go back up higher and we hit this 25, 620 level, then I think it's a stronger short, depending on price action. But we've already, we flipped from oversold to overbought in like a day. Again, it's kind of difficult to trade it. But again, it's like you just got to figure out a level, which pretty much just says anything above it, it's a long, anything below is a short. So that pretty much covers like the indexes. Any questions or anything I didn't make clear? Any hypothetical situations we haven't explored? Yeah, so I guess guys, like it really just kind of comes down to whether we have a rejection tonight and then it's bought up. And then I still don't think it's a good range to buy anything. It's like I'm not getting the warm and fuzzy, let's go long vibes. I'm getting the slow realization that markets need to take a breather. And this thing is being propped up. So I think, it's draining a lot of liquidity out of the other systems. And I think that like now that crypto is here, actually let's start talking about crypto here. But did I cover that? I'm gonna assume that's a yes. But okay, so like with crypto, to kind of like change the beat here, I think I do think that we are going to see some sort of like drop again. It just kind of looks like that between the different wave counts and just kind of like how these things kind of operate. We did get some decent buying, but there has been a lot of selling. And I think if you get selling in indexes, you'll get selling in crypto, but there has to be some sort of like liquidity grab or something, because right now, like there's just not like there's not a lot of money flowing into markets. Like quarter one is typically a bearish quarter for markets just because of liquidity when it comes down to like the Treasury and the Fed and all sorts of fun stuff with like reverse repo agreements and all the other fun things that come out of come out of those like seasonality cycles. But with Bitcoin kind of running a little higher, I mean that's good for MSTR, but I'm kind of thinking we might get pretty close to a little bit higher, I think, and then we could probably drop some. And that's I think at the moment it's like it kind of didn't really stop anywhere significant. It just stopped. And typically that means like it's the end of wave 3, and then you see consolidation in the wave 4. But I do think that you'll see some sort of extension. It doesn't have to necessarily be down to this A equals C kind of level. It could stop at like this 57,000 here, and that would be I still think a pretty significant wave 5 and shake out a lot of lot of new longs. So from a liquidity perspective, indexes are not attractive at the moment just because they've been sky high for months, and you see something like crypto where it's been beaten down for months now, and now it's almost like, okay, well maybe this is actually a pretty good deal because these charts are getting low. So that's kind of what I think about it. I would say, if there is, let's say there's a fast sell-off with like a fast sell-off here with equities, then all ships rise and fall with the tide. So most likely you'll probably see like a Bitcoin sort of Bitcoin sort of a reversal. I kind of think we might see, let's say like no, that's not right. So like if this remains in this sort of channel here, we might have seen a high today. I mean, so I did add some shorts or some short hedges here for MSTR, but even if this pattern comes to fruition here, this would still be like the 74,400 level. Like that's still bull target 1. It's still pretty close. But it from like a symmetry perspective, like with the hour charts and the daily charts, like you really do start to look at some of these things. And I do think that this is a very strong possibility for something like Bitcoin. And then you could see like a wave 5, something like that, or you could see a bigger dip. But then after that, I think it's done selling. I think it's a buyable dip after that. But what that means for MSTR, well, not good, I guess. But same sort of concepts here with MSTR, where I'll just want to draw because I know some people watch this after the fact here. So with MSTR, this has the same sort of kind of vibe to it, where there's this doesn't look very symmetrical to me. This actually kind of looks more of like a ascending sort of pattern that really needs to see some sort of it needs to see some sort of like pattern expansion to the downside. So in my opinion, like if you saw like Bitcoin sell off, then you'd probably see the same sort of thing here with hold on, I'll move that trend line here a second. So you could see, all right, so let's say this is I think probably a realistic view. And then you could also see a pretty big drop. I don't want to scare the crap out of anybody, but it's realistic. You could see something kind of like that, where it hits this last this extension level here, the 72. But I think that would be, I mean, in my opinion, I think that would be probably, I mean, that would be a devastating capitulation wave for crypto for sure, and for something like MSTR. I would definitely go full nuts full nuts with a hedge once if this actually does happen here. But if I guess if this happens, it'll be like I think probably a multi-year low for crypto, and that's only if equities I think don't really follow, just because low prices they'll attract liquidity, and maybe it just alternates with people go out of people go out of equities and they go into crypto, that kind of thing, and vice versa. Buying the dips, but there has to be bigger dips. These little micro dips of 2% are not good for longer term investing. Okay, so that's crypto, MSTR. Any other questions about that? Okay, so the yield. This one is, I think, just set the rise here. A rising yield is bad for equities, but we've had that before, and equities didn't care. So, the usual correlations between, like the inverse correlations between yields and equities have been kind of broken for a while, like a couple months. So I don't want to spend too much time on it. I think it's like it used to be a really good signal, but now it's not. We got a little multi-week buy signal down here, but it's kind of hold it for a while. All right, so let's look at gold and silver. So gold, I think is gonna gold. I think here you're gonna see a bounce, probably up to at least I'd say 2550. Yeah, 2550, and then with possible extension up to like up to the bull target again, because it kind of did overshoot. This is actually a really good example of what I was saying before, like with the MSTR chart. You see how it kind of like stops up here, and then there we go, and then you see this this pattern expansion to the downside. It doesn't necessarily mean it's going to fall right away. Like we could see another move like this where it makes a higher high and then it reverses again. But if it the higher of a retracement high you get, that typically the more violent of a sell-off you get. I mean, this is really fast from back in early February, and the same thing with silver. We're now starting to look a little more symmetrical. That's why I think you could probably see metals climb a little bit more, and I actually think probably go a little faster. If it'd be a big surprise if metals didn't sell off, I guess, when equity sell off. So you just never know. Okay, it's metals, oil. So oil, the only thing that I would say, if you're short, watch out for the pennant, where if we do have some serious escalation here, we could see one of these sort of pennant moves here, where you could get $85 a barrel probably pretty quick, if not even higher, maybe like $90 a barrel. But that's just my opinion, like a normal sort of retrace here, because oil has been selling down for at least a year. But now we finally get some revisit to the levels that we saw back last June. So what I'm looking for here is a breakout, or like a breakout higher. And if that breaks out, then yeah, I think oil's along. But I actually think it would be a lot easier to short it. And because oil can only go up so much before you get rebellion from your voters. And considering how there's a election coming up here in November, I think that let's say price of oil goes up for a month or 2 months, that kind of thing, then I think you'll see like a gradual retreat of that. But it depends on geopolitical things, all sorts of fun stuff like that. But I still think that it's consolidating. I'm kind of glad took profits while I could get out of that larger position. And if it does kind of squeeze up a little bit more, if it gets up to like $85 a barrel, like you better believe I'm going to add some oil shorts, just because I just firmly believe that the administration is not going to allow high gas prices. Like they manipulate everything else, so why not gas prices? It's all about the optics, guys. Natural gas. So this one, I think it just had a bit of a small correction here. This chart's a little weird, kind of looks weird, but yeah, just a small little pullback here. It's probably gonna head back up here. Not sure when, but we're starting to see some volume pick up here. SOX is there really wasn't like a crazy fast bounce here. This purple line is the 50 simple moving average, or the daily simple moving average, and I would expect some sort of bounce there, just like I'll expect a big bounce when we hit the 200 daily moving average. But for right now, I still think there's a little bit more room to go for some selling, but I'm not gonna bank on it. I mean, how many times have we been surprised? But I still think that right now, if I were to just freehand it here, there's a possibility here that you could see this like triangle sort of thing, and this kind of looks like the index charts now, right? Like you're starting to see all these like ascending or descending patterns. They're all kind of blending together. So if you look at something like Nvidia, this one I think is a little bit easier to see, where this one I think we'll see a little bit more of a retrace, like probably back up here where you had like back up to 190, and then I think you could see a larger sort of sell off. But when that's going to happen, not quite sure. I think maybe like maybe you might get like a bigger pullback first. Like you might see something like this where it's kind of like makes a lower low. It's just as an example, like a lower low like that, and then it kind of pops back up, and then yeah, that's kind of what I'm thinking for that. And that's again assuming we actually do get like a reasonable pullback here. I think Nvidia is due. I mean, yeah, they got cash flow, but like over time, that's gonna, they got to put more numbers up. Okay, Tesla is kind of the same situation. Like I think it's just got a little bit more to go here before you get a stronger buy signal here. 374 I think would be a really good entry point. If not, then like 360. Yeah, and I think that's it. Any questions, comments, concerns? All right, I'm gonna stop the recording.